The Federal Reserve appears to be delivering on rate cut hopes, the Fed deciding to keep interest rates unchanged coming out of the central bank's two-day policy meeting in July. But Fed Chair Jay Powell's dovish comments signaling the central bank could cut rates at its next meeting, September. Investors now pricing in an 86.5% chance in totality that the Fed could potentially cut rates by 25 basis points at the September meeting, according to CME Group's Fed Watch tool. For more on this, we want to bring in Jim Bullard, who is the former St. Louis Fed president. Great to have you here with us, and thanks so much for taking the time here. I just want to get your read through on, some of the response that we had heard from Fed Chair Jay Powell in the press conference yesterday, what you make of his tone in comparison to the Jay Powell that you know.
Well, he's definitely set up September as a key point for the committee. I think the market pricing is about right, the 85% there. You do have two inflation reports, you have two jobs reports before that meeting. So it's possible that it would get derailed, but I think the committee's ready to go. I think it's appropriate. They're taking on board the considerable disinflation that their policy has brought about since they started in 2022. And so things are looking pretty good for the Fed and pretty good for a rate cut in September.
Jim, when you take a look at some of the softening that we have seen in the labor market, you have jobless claims rising to the highest level that we've seen in almost a year. We also saw some softening here in the ADP print earlier this week. Is the Fed, from your perspective, are they paying enough attention to, are they closely watching enough some of the deterioration that we are seeing in the labor market? And is there a real risk maybe that they are waiting a bit too late here if they don't move, or they're not going to move, obviously, until September?
Yeah, unemployment's been creeping up a little bit, but that was something that the committee predicted would happen. And the unemployment rate is still below most people's estimate of the natural rate of unemployment for the U.S., which would be somewhere in the mid 4% range. So you could see a little bit more uptick. I think what was unusual about unemployment was that it was below 4% for such a long time. You really had this extraordinary labor market in the last couple of years. So it's all about normalizing on the labor market side. Now, of course, the committee doesn't want to let that run away from them. And so they're certainly, paying more attention to it. They changed the statement a little bit to emphasize that a little bit more. But I don't think right now that they're in bad shape at all. The unemployment rate is still low by historical standards in the U.S., and other metrics on the labor market have come into line with where they were before the pandemic, and the pre-pandemic labor market was considered a very good one. So it's more about normalization of the labor market than about deterioration of the labor market.
Jim, given your extensive time at the Fed, there's even during your time there been criticism that the data that the Fed is looking at is too far backwards looking in some cases where there is perhaps better data. And if you ask Kathy Wood, she would give you a whole list, as we had heard last year. Is there other data, though, that the Fed could be considering, especially if the data that we're seeing come in is actually going to show that we may be in a recession or may see, to Shauna's point, deterioration at a more larger or outsized level than is actually taking place in the near term or real time?
Criticism of the Fed? I never heard of it. No, let me just reassure your viewers and listeners here that the Fed looks at everything. So if there's any scrap of data that would help predict the future evolution of the economy, they've certainly got a team on it and have probably written a couple of papers about it. So the truth is that recessions are caused by big shocks. The pandemic is a poster child for that. You can't predict these big shocks, so you don't really know when they're going to happen. And that's why the future evolution is unpredictable. But you can track the economy pretty closely. And the Fed has a very large team that does that as best we can. Now, I would say that the use of real-time data has increased certainly through the pandemic. high frequency data, which is always available from financial markets, but from other places. So there's a whole ream of new information that wouldn't have been around, 10 or 15 or 25 years ago. So it has evolved over time.
Jim, what would you say is the biggest challenge or risk here to the Fed right now? Is it a much weaker than expected print tomorrow on jobs?
I think that would just send any of these particular reports are just one particular data point. So the chair did emphasize that it's the totality of the data and the total narrative. We'll see what we get tomorrow. I think probably the biggest issue here is now the debate will shift, because it'll be that September's got high probability, and how fast does the committee want to go? I think the baseline might be that they'll go at every meeting starting in September. And also, what's the ultimate destination? So I think that will, and most people would say 5 3/8 is too high for the policy rate right now. But where do you want to go to? Do you want to be in the mid 4s? Do you want to be lower than that, in the mid 3s? I think that's going to be a debate that heats up as we start this process. But overall, I think it's basically very good news for the Fed. They've got the economy growing near potential. They've got unemployment coming up to the natural rate. They've got inflation coming down to target. The only piece that they need to nail the soft landing is to get the policy rate down somewhat from where it is today.
And Jim, we heard Fed Chair Jay Powell yesterday just strongly denying that politics is going to make this impossible for the Fed to cut around the election. I'm curious, just from your time in the Fed, how is Powell and his colleagues thinking about this, the risk of cutting too close to the November election? Is that really an issue that they are debating?
Yeah, the thing about inside the Beltway is you can't make anybody, somebody's going to be mad at you all the time. So I think previous committees have looked at this and have said, well, we might as well just play it straight up based on the data and rationalize our decision based on the data and go that way and not worry too much about the election. I also would dispute the idea that anybody ever won an election based on 25 basis points at the September meeting. I don't think that's ever happened. So the notion that this has some kind of big impact or something on the election is kind of hyperbole, I think.
All right, Jim Bullard, great to have you. Thank you so much for taking the time to join us here this morning. A former St. Louis Fed president and dean of Purdue University's Junior School of Business. Thanks so much, Jim.